It feels like it's been forever, but we're back. I got a brand new room, brand new office, studio lights, so the lighting will be more consistent. Also soundproof the room, so the sound quality should also be excellent. We are leveling up, and we're leveling up in the market as well. I've been killing it. So let's hop right into the Sunday report and dive in. So 2 weeks ago, we were talking about 350 being a potential bottom in the market. And if we dropped further below that, to look for the 330 range, which is around those pre-COVID highs. And we ended up seeing that bounce on 350 came in beautifully. Actually, let's pull that up and look at this here. We can see how that came through. One of the things that I want you to pay attention to is look at the TTM squeeze here starting to fire. And on top of that, our RSI, if I move my camera here, you can see our RSI is finally above 50. Now, this is usually a bullish sign. It's a sign of bullishness returning back to the market. This is what we want to see heading into earnings, heading into that potential election rally that we're talking about. Another thing I want to point out is we're seeing the same thing fire for Bitcoin as well. And this is on the weekly chart that we're seeing this. And another thing you want to keep track of, and actually I should go ahead and make that easier for you to view, is look at the Bollinger Bands on Bitcoin right now. Now, one of the things you want to take note of is when these Bollinger Bands tighten like that, you can see how wide they can get. One of the things you want to watch for with Bollinger Bands is when they tighten like this, it usually means that there's a big move on the way. So you can see every time they tighten, you then get this large move. And these are all just pieces I'm using to build my narrative, right? I'm collecting the data, seeing what there is to garnish, and then saying, okay, how do I piece this together into something actually coherent that I can use to then drive my thesis for my trades right now? And it looks like this is playing out perfectly for, hey, a potential election, a potential rally into the election. And on top of that, earnings reports have been pretty much better than you would expect. Now, there's been some outliers. Snapchat did pretty poorly, and I think that that is a sign that Snapchat sucks and not that the greater market sucks right now. I think Snapchat has tons of localized issues. One of them being that this management team has made it so that no one else has a say. He basically wants to be Mr. Dictator. Usually, if you're a public company, people can have shareholder votes. The board can get together and say, maybe we should do this or maybe we should do that. But Evan doesn't want that, so he doesn't allow it. You know, you can see Elon, for instance, Tesla. Tesla could shove Elon out, much like, you know, Apple back in the day shoved out Steve Jobs, right? But they ended up bringing him back because he was so good. And no one's shoving Elon out, no matter what he does, no matter how controversial he gets, because he's a really good CEO. But Evan's over there scared to death because he knows he sucks and he doesn't want to be shoved out. I don't know. Then maybe that's a bit inflammatory, a bit flagrant, but that's my honest opinion. I can't believe that this company, which is a solid company at its core, is so poorly managed. Anyways, rant over. Let's talk about the rest of the market and what's been going on. That clip was from one of the contestants from the meme contest. I think he did a great job, even though he didn't win. But hey, that's a perfect segue into earnings season. And we got a lot of companies to talk about this season. What do we got? We got Google, Microsoft, Visa, Spotify, Amazon. Look, these are big names. Pinterest is on there. So we're going to go ahead and talk about a few of these and what I think, what the highlights to me. Of course, we're always going to have more in the Discord. But let's go ahead and start off with Apple. Apple is a titan. They've maintained their seat at the top of the food chain for quite a while now. But I think that Apple could be in danger. And we've seen some warning signs from headlines like this saying, hey, they're lowering production because they see demand falling off. And lots of companies have been giving warnings like this as well. We saw Amazon also say that they were worried about how the revenue would be for the holiday season. Of course, so far, that hasn't come true, but I think that might be the death bell toll for Apple. Now, in China, we're seeing that demand isn't just like slowly falling like it is in the US. It fell off a cliff. A lot of that could be because China's economy is kind of falling off a cliff to the extent that they don't even want to print GDP numbers anymore. So for me, this means I'm going to make a play to the downside. I'm holding some puts on Apple, and I'm expecting first time in a long time for there to be an earnings miss. Now, that's a big bet to take. and it's one I've tried in the past that hasn't worked out, but it is one of the plays that I'm also using as a hedge, because remember, this market still pretty shaky. So if I'm going to be making a bunch of bullish plays on companies I like, and I'm going to have my portfolio disproportionately long, I do want to have some companies picked out that I'm going to be shorting, so that I have some downside protection and some compensation if the market decides to turn over. So let's talk about a long idea. Now, I've already actually been long on Pinterest. If you've been in the Discord, I gave a notification on this, and actually we made a bunch of money on this headline when it dropped back in early October. One of the things I'm thinking about Pinterest is, hey, this is a very solid company with a very unique data set and a very unique market that has a lot of buyers, a lot of people looking for goods. There's a good transition over to retail sales at this company. And that data, I think, could be really valued to a big tech company, like let's say Google, that might see them as a buying opportunity when the market's very low like this. And we've seen some upgrades also come out on the stock as well from Goldman, which we took as a chance to take some profits. But I still am long on this company. I think they're a solid name. And I think that this company also could have a lot of upswings just by cutting back on the amount of people necessary to run it. Now, we've seen some companies, like one of the few good things Snapchat did was actually cut a lot of the workforce. One of the things Elon wants to do is cut 75% of Twitter's workforce, and I think you could do this across all the social media companies. They experience an abundance of extra cash that they were able to deploy and build these major workforces, steal all the engineers from the market. But I don't think that this is actually necessary for these companies to actually operate. What that means is there could be a lot of cuts here. You could cut a lot of this fat off this company, run it down to a skeleton crew, get it to some solid profitabilities, make some key changes from a bigger tech company, and these could be really solid purchases. Now, speaking of social media companies, I also want to talk about Meta, formerly known as Facebook. Mark Zuckerberg recently went on the Joe Rogan podcast, and I think that this was really valuable. I really enjoyed this 3-hour conversation with the CEO. I think it painted him in a much different light, made him seem much more human, and it also brought a lot more context to the decisions that Facebook has been making. Now, I've talked to a lot of social media content creators as well, and they are saying that Facebook groups is like where it's at right now. They are exploding and super popular. And I think Facebook is kind of making a comeback, quite surprisingly. Instagram seems like it's stalled. It's not always going to be the giant that it was in the past. And Facebook making this small comeback in their Facebook groups, building these small communities, also gives them a nice little bridge into a potential metaverse scenario, which is, the whole purpose for rechanging and rebranding your company to Meta, because you want to make your whole goal the metaverse. You want to get ahead of the VR. And I think this is another company that could do just a few changes, get down to that skeleton crew, make some job cuts, make some key moves here, continue to do different podcasts like this, because I think it's doing a lot for the brand. I think people had an overwhelmingly positive reaction to this, which is surprising, because when you hear the name Mark Zuckerberg, it doesn't have a lot of positive connotations. But I think that these are really positive moves from Meta. And I know lots of people think that this is a giant value trap. This is not the company you want to invest in. But I wouldn't be surprised if Meta makes an epic comeback. And I find it really hard to bet against the Zuck. And let's do some reframing around the context here. I think that the future is going to be a creator economy. And one of the great things about the Facebook groups is they're centered around creators or different hobbies that people have. This will bring people in, this will create these communities, and that could be the avenue for where Facebook can actually get advertising. Because I think a lot of advertising that's going to happen in the future isn't going to be just broad-based advertising on a Google, just using the Google Analytics or using Amazon Analytics. I think they're going to occur through a individual. People are going to seek out content creators because then they can better target their audience. And since most of these social media companies make most of their revenue off these advertisements, I think it's going to be key that this is one of the major parts of Facebook that persists and has success. And I think the same set of concepts could be used for Pinterest in the future as well. So we're getting low on time, so I'm just going to fire off a few more ideas as well for this earnings season. First of all, I'm bearish on Enphase, and actually the short that we had was on First Solar because I'm bearish on solar power when the housing market is in a downturn. Now, that trade already made quite a bit of profits. I think max is like 300% returns. That turned out really well. I think the stock was also in a point where it looks like it was going to have a downturn. It's a bit risky there. It's a bit contrarian trade to make, but I like contrarian trades, hence why I'm shorting Apple like a madman. And Jinko Solar will be another name that I'm bearish on, especially since they're based in China. And Shopify is going to be a name that I'm long on into earnings. Now, I don't think the lows are in for this company, just like I don't think the lows are truly in for the market. I think we could see future lows next year. But for Shopify in particular, I think that the pain that this company is suffering right now is actually good for them. There's a lot of burning of the dead wood. A lot of the companies that existed within the Shopify network have definitely not been built on solid ground and they're falling apart. But I think what remains after will be really bullish for the company. And I think if they make some key changes in management, hey, do some job cuts, hey, try to get some better margins here, I think the company could have a lot of success. If you look at the chart for Shopify, has it really changed within the last 4 years as what the chart shows? Is this company headed for bankruptcy? I don't think so at all. I think the core business model will be essential in the creator economy, and I still like them as a long-term name, and I see the current price as a point at which I think it will outperform the greater market on a rally. So I really quickly just want to talk about one company that's already reported its earnings that had a surprise. We actually were long on this company into earnings, but since I didn't do a Sunday report last week, I didn't actually talk about it on any of the social medias. I only talked about it in the Discord. And we could see here from the charting that I had on Netflix, yeah, we had a few wins here. We actually double dipped. We actually played on the earnings and then afterwards set up another play that was a long that ended up giving 270% returns to one of the members in the Discord on Friday. Really banger one there. And I do want to point out here on the Elliott waves that we are looking for this 300 target. Now we're seeing here 304 as this 0.618. However, I think around 300, you've got a good risk reward to that range. The higher up you get, the less reward you're going to have, the greater the risk is. I think 300 is going to be my exit, but this is another play that I'll likely extend. I do like it. One of the things is, hey, we took profits on Friday, and if you look at the RSI here, we can see that this is getting a little overbought. I would expect to see a pullback. I'm not thinking this is going to go straight up to 300, but over the week, I would expect this to pull back. I'm going to see this as a good point to hit another entry into that election rally. I think that Netflix did a solid job on earnings, and it's one that I want to continue to play. This is just to point out, hey, after the earnings, Meta, for instance, had a sell-off because of the Snapchat earnings. I'm still long on Meta, right? So just because the earnings has already happened doesn't mean there's other potential plays that you can make in this market. So keep that in mind. Don't just focus just on earnings. There's still a lot more going on and a lot of opportunities to be had. So let's go ahead and take a look at the economic calendar as well. There's two things I want to point out here. On Thursday, we're going to get our GDP numbers. That's Thursday morning before the market opens, so we'll know what the market thinks when it actually does open. But I think there's been a lot of copium about the fact that we're in a recession. I think after the third quarter, again, prints to the downside, saying, hey, growth is still slowing down. I think there's been a lot of copium about that, but I think that a downside print here could bring even more uncertainty. These people are like, everything's fine. The Federal Reserve changed the definition. Therefore, we're smooth sailing. Yeah, I don't know about that one. But the other one you want to watch out for is personal income and personal spending. Also going to be on Friday morning before the market opens. This is another one where it's, hey, we've gotten a lot of warning signs that consumer spending is going to slow down. However, I think it might be a bit early for us to see the damage that we're expecting here, and that could later come in the beginning of next year. So the way I'm going to handle those data reports is at the beginning of this week is really bullish and I'm doing really well on my longs. I'm going to de-risk and take some profits heading into those reports, protect myself on the downside. Of course, I have some hedges, but I'm still disproportionately bullish right now. And that's just for me personally. That's the way I trade. I like to take that uncertainty off the table. Once I make profits, once I'm in profits, that money's mine and the market's not getting it back. So we got a lot more things to talk about and I'll be making some more content, but that's going to be it for this video and I will see you soon.